What's good, everybody, and welcome back to another video. So in today's video, we're going to go over this topic, which is very important when it comes into trading. We're not going over fundamental or technical. It's going to be more in the psychology part. This is a quick video, a PowerPoint that I made for you guys. It's going to be going over what is FOMO, why is it dangerous, what are 3 different types of FOMO, and 3 simple steps that you guys can follow so that you guys can avoid making FOMOs in the market. So with that being said, let's get right into the video. So first thing first, what is FOMO? So FOMO, it stands out for fear of missing out, right? And in trading, it's the feeling that you get when you see the market moving in a direction, right? And you feel like, you as a person, right, you feel like you have to jump in because you don't want to miss on the opportunity, right? Again, this could be either a breakout, this can be a trade that you guys have planned out, a big price moving to the upside, or again, it can also be part out of trading, which is seeing someone else profit from a trade, right? And it's that feeling, is the urge, is the temptation that you guys can see that is going to make you cause emotional decision and impulsive decision that can obviously lead you guys to losing a lot of money. Now down over here, I have a very quick example. So let's make it as a quick scenario, right? So imagine you guys wake up in the morning, you guys are planning, pretty much marking up the chart, and you guys already have a set up plan, right? You're seeing price action, and you see that price action does move very, very quickly towards the upside, right? In this example, we're going over the upside, but again, it can be either range, either up or down, right? You didn't catch the start, or you didn't catch the move from the beginning, right? From the start. And now you as a person, right, you're going to experience this emotional feeling, which is FOMO. You feel like you need to get in the market before it goes higher, right? Because you as a person, right, just because you're seeing the market heading towards the upside, us as human, right, we're going to experience this feeling, which is, oh shit, the market is moving, it's time for me to make money, right? So without thinking it correctly, without following your plan or not following your strategy, you're going to enter the trade late, and let's say the price retraces and it hits your stop loss. That right there is the FOMO in action, right? You see the market move to the upside and you feel like the market is just going to continue heading towards the upside. So your idea as a person, right, as a trader, you're like, shit, the market is moving, let me get in the market because again, my buys overall was bullish. But the idea setup was for you to wait for the retracement before heading towards the upside. There's 2 things that you did here. You broke your plan because you did not wait for the retracement. 2, you're letting your emotion take control of your mind, right? Now you're trading with emotion. What is this basically is going to do? You're technically giving money for free away to the market. In this case, you're now gambling and you're no longer trading. You're entering the market with an impulsive decision, and there's going to be times, don't get me wrong, there's going to be times that price can definitely continue heading towards the upside. That's going to call lucky, right? Because again, price can either do 2 things. It can go to the right direction or it can go to the opposite direction. That right there is called lucky. And then there's going to be times as well where price action can just retrace and then take you out of stop loss. And then again, you're going to continue doing the same habit, right? So for you guys letting emotion get control you and letting FOMO control you as a trader, this builds bad habits, right? This is going to be a habit that you're going to see every single time. Because let's say just because you catch this move over here, let's say the next move you see price action does the same exact thing. Let's say the first time you got lucky and price action just head to the upside. The second time, your mindset is going to be like, okay, look, the first time it worked out. Might as well just do it the second time, right? I'm only risking 0.5%. That right there is already having the urge, having temptation control you as a trader, right? There's going to be times that it can work out for 2, 3, 4 times, but then there's going to be times where it can just retrace and then take you out of stop loss, and then you're going to continue losing more money than what you're supposed to. This other question that I got here is, why is FOMO dangerous, right? Now, the reason why it's such a big issue is because it can lead you to making impulsive or emotional decision, right? And when you trade based on fear or emotion, you're not trading based on logic or on your strategy or on your plan. Instead, you're reacting to emotion. You're letting your emotion get into your mind, and you're just trading because you feel like you're missing out. You feel like the market is going to continue heading towards your upside, which is going to lead for you guys to make poor decision making. And whenever you guys make this bad decision, again, like I said earlier, you're building a bad habit. You're going to do it one time, you might get lucky, but then the second time it's going to continue being worse and worse and worse. At that point, you're no longer trading, you're now gambling, right? So you're just giving away your money to the market for free. Now check this out. Look at the example that I got over here. Let's say that you guys see a big move in the market and you decide to chase it, right? You see this entire impulse move to the upside, and you as a trader, you see this and you're like, oh shit, let me get into the market, right? Because I want to be in this trade. You ignore your planned trade, your entry point, and you ignore your risk management. You enter late and then price reverses, hitting your stop loss, right? there's a chances that what if price session you perfectly planned it correctly, but you saw this exact impulse move to the upside and you thought that the market was not going to retrace, and then you were fear of missing out the profit because again, you were probably right with the bias, but then if you enter off this impulse move, right, you're just letting your emotion get into you. What if price action reverses and has a solid plan just like I have over here? You then not only missed out on a solid trade, but you also take a loss because you acted on emotion, which is FOMO. You were scared of missing out on this specific move. So you already got two losses there. You lost a trade, and then as well, you're losing your mindset. You're not building a strong mindset as a trader. Now over here, I have different types of FOMO that you're gonna experience as a trader. You have the miss market, right? The miss market was something that I have experienced many times, right, when I started trading, right? Which is a miss move. When you see the market moving in your direction, but you missed the entry. Let's say you guys had a perfect planned trade. We did see the price action perfectly, rejected your areas of interest, gave you the entry, but you were away from the market, and you see the price action starts taking off to the upside. Now, you're going to experience the urge, you're going to experience the temptation to jump in, even though that you missed your entry. This over here, it's a horrible thing to start doing as a trader. Again, it's a habit that you're going to build, which is horrible, that you guys need to break. If price action does this, right, let's say you guys were looking for long, price action perfectly retraced to your areas of interest. If price action does that and start taking off to the upside, it's perfect. That is completely fine. You were right with your analysis. Now, you as a trader, what you need to do is accept that you missed your entry, wait for the next pullback, right? So if you guys are in an uptrend, right, you guys are looking for impulse move to the upside, you just simply wait for the next higher low leg at another areas of interest. Wait for the same exact thing that you waited over here, but in the second time. Again, the market isn't going anywhere, and the market is going to give you guys endless of opportunities. The second one that I got over here is chasing price, right? When you see the market moving quickly and you enter the trade because you don't want to miss out on the profits, right? This is now driven by greed and the fear. If you don't get in, you'll miss out on a big opportunity. So you no longer have FOMO here. You're now also experiencing greedy. You want to make money because you see the market moving, so you feel like you need to make that money, right? Chasing the market is 100% horrible for you guys to do. If you see the market just heading towards the upside, you don't want to chase the market just because you see it heading towards the upside. Again, you simply want to wait for the next opportunities. Again, the market isn't going anywhere, guys. The market is always going to be there, and it's always going to give you guys opportunity. Never chase the market and just wait for market comes into you, right? You always want to wait for the market to come to you before you guys take a trade. And the last one, which is out of trading, is social media, right? You see everyone else making money but yourself, and you see yourself that you are left behind. Remember, everyone has a different journey. Everyone has a different path. Just because this other person made more money than you in trading doesn't mean that you're not going to get into that level. If that happens, right, you're basically just comparing yourself with other people, and you basically don't even know who you are. You basically don't even know what you want because you're comparing yourself with so many people and you feel like they are better than you. Remember, everyone has a different journey. It might be longer for you or it might be shorter for you, right? But again, just follow your journey and always stick to your plan. Never look at other people, never compare yourself with other people. This can actually ruin your identity, and it can actually ruin you with so many things that you guys do besides trading. Now we're gonna go over the 3 steps that has personally helped me overcome this FOMO feeling. So the first step is sticking to your trading plan. It might sound as easy, right? It might sound like, hey, just read this and just follow it, right? It sounds easy, but again, we're human, we make bad decisions all the time. It's gonna be tempting to see the market just moving to the upside and you wanna get into the market. But the only thing that's going to save you guys as a trader is following your trading plan. If your trading plan says, hey, I'm going to wait for a break and retest setup, you're always going to wait for this specific setup. Don't trade out of your strategy. If you're trading out of your strategy, again, you're just gambling and you're not really a trader. You're just a gambler. So just like I have over here, a trading plan is going to be a clear view on how you're going to enter the market, how you're going to exit the market, and what exactly strategy are you going to enter the market. When you guys have a plan and you stick to it, there's no need to chase the trade or fear out of greed, right? You're no longer going to fear FOMO or you're no longer going to feel greed. Why? Because you're now following your plan. Again, it sounds easy, but I do see a lot of traders that they do not even follow their trading plan and they're just making, shit ton of trades that doesn't even make any sense. So always follow your plan. So like I have over here, let's say that your trading plan involves with a break and retest at an area of interest. If you missed a trade, that is 1,000,000% fine. The market isn't going anywhere. Again, the key is to follow your plan and wait for the next trade that fits your strategy. If you don't see this, again, move on to the next trade. If you see the next trade, perfect, you take it, right? Don't try to force a trade just because you feel like you're missing out. Again, Don't try to create something when there's nothing. Over here, I got step number 2. Accept your losses and wait for the next opportunity. Guys, you always need to accept your losses. Accept your losses the same exact way that you guys accept your win. Again, not every single trade is going to be a winner, and that is, again, 1,000,000% fine. The key is to manage your emotions, right? Control your emotion, learn from your losses, and wait for the next opportunity that fits your plan. Chasing after a loss is only going to make you to lead even a bigger losses, right? Just because you took a loss and price action, let's say you were right with the market, right? This happened to me today. I got wicked out and price action went into the direction that I wanted to get in. If I would have let my emotion get into me, I probably would have lost way more money than what I lost, right? So what I simply did was wait for the next opportunity, was exactly what happened, right? I waited for the next opportunity to get into the market. And here's the example. If you take a loss on a trade, don't rush to make it back immediately by entering another trade that doesn't meet your plan. Instead, you go over the trade, what went wrong. Was my entry wrong? Was my stop loss wrong? Was I wrong with the direction? And then you wait for the next opportunity by sticking to your plan. You're most likely to recover your losses over the time rather than making an impulsive decision. So accept your losses the same exact way and always wait for the next opportunity. And the last step that I got over here is step number 3. Take a break to clear your mind. We don't want to trade with many different type of emotion. If we're feeling sad, we don't want to trade. If we're feeling angry, we don't want to trade. Any type of emotion is going to lead us to making bad decisions to the market. Again, trading can be very mentally exhausting, right? When you're feeling overwhelmed or you have so many type of mixed emotion, it is easy to fall as a victim to FOMO or fall as a victim to the market, and you guys are going to lead to making bad decisions. It's like what I have here in this example. If you have any type of emotional feeling, all you got to do is walk away from the screen. That is going to save you from making dumb decisions, right? So if you guys feel bad, you guys have very mixed emotion feelings, simply walk away from the screen. It's going to save you guys a lot of money. So that's pretty much it, guys, for the video. I hope this video you guys did learn something. And if you guys have any question, always feel free to comment down below. And I'll see you guys on the next one.